Rents are down in Vancouver, and today I have a special guest, Mr. Keaton Bessie from the Greater Vancouver Tenant and Property Management is the name of your company, to get a boots on the ground discussion about what is happening to the rental market in Vancouver, both in terms of if you're having something to rent and also from the renter's perspective. Keaton, we have you on periodically about every sort of 6 months, and I actually looked back at the last title and 6 months ago, and rents were dropping as they are now, like they were then. And we go 6 months prior to that, and we were at an all-time high for rental rates. So I'm really excited to kind of go through this conversation with you today and really try and get an understanding of where the market currently sits for rentals in Vancouver. So I think maybe we'll start off by maybe frame up sort of the current situation, where we currently find ourselves in Vancouver. And by Vancouver, I mean the Greater Vancouver area. And what's going on? It seems like everywhere I look, it seems like all the listings that I'm taking on anyways that had tenants in them, re-renting is not as easy as it was even just a year ago.
Yeah, it's tougher. Just some really simple stuff that we're seeing on our side is, the last, like you said, so the last time and then the time before that would have been maybe a year. We're pretty regular on our every 6 months. And when we talked a year ago, our days on market would have been like 32 days. And people often say stuff like, wow, the market's super hot. Like, why is it taking you guys so long to rent a property? It's like, well, because you wanted $500 a month more than we told you it would rent for at the start. So in that case, we're always pushing against repeating client expectations to help them understand like where the market actually is. It's not just an infinite up. And now we're seeing days on market actually hit 50 in the last quarter of last year, and it's catching back up now at about 43 just for like our in-house stuff. So it's slower than it was a year ago. And then on the other side, like we're not getting the same rents that we were, summer 2023. Like August 2023 was the top of the mountain, and we've done nothing but come down since then. So there's always the question of how much have rents fallen? It's like, well, since when? Like what day are you looking at? Are you looking at when your last lease started, which is what most people, when they call us, are talking about? Or, we're looking at peak. Like if you and I were just to have a phone call and talk about it, it's right. Like from peak. So I've got a couple examples here for people listening. So like July 2022, for example, we got a 30-year-old 1,000 square foot 2-bed and den in Yaletown. Pretty standard rental property. They lipsticked it well, so good floor, paint, stainless steel appliances, new countertops, clean, ready to go. That rented in one day. We had 11 showings, 14 bookings. So like 3 people didn't show up, 11 showings, $3,500, flew out the door. And that was not even the peak rental, right? That's what we're used to. Today, we're renting it again. It's been on the market for 81 days, currently for $3,400. We've had 13 showings. So the last one rented in one day, 11 people showed up, 11 appointments in the same day. 81 days, we had 13 people come see the property. Still not rented. The last day of showings we had scheduled had 0 people.
Wow.
We're expecting it to go for $3,300. So that would be a 6% drop from July 2022 prices. So getting back to my point to kind of start off is it's not so much about how much lower is it. It's like, in what date are we renting now? And it's like, we're before the peak in 2022, and we're into like July, June, May. And that's kind of where I've seen stuff. That's what's happening. Stuff is still renting. But you got to find the price.
Well, that's interesting because I think when it comes to investors, when they're looking to rent their properties, at the very least, they're trying to get their properties to cash flow, even if it's cash flow neutral, so that it doesn't cost them something to rent this property, and they can ideally take advantage of an equity gain. But there's been so much that's changed, I feel, in the last sort of year and a half with respect to even just the condo market, generally speaking. that we're seeing a fairly large discrepancy now, like you're mentioning. You're trying to rent this property. It's been 81 days where it took literally 81 minutes beforehand. And this is just a shift. And I think it illuminates really sort of the state of the condo market, generally speaking. With respect to condos, are you seeing that 6% drop in rental rates, let's call it from the peak to where we are today, across the board in all asset classes, or is it specifically to condos primarily?
So no, that 6% is based on what we think this property is going to now rent for. 6% down from July 2022,
Right.
and the peak was August 2023.
Oh,
So
sorry,
like we
yeah.
had July, and then we had
And it went
then
up.
all of
Yeah.
next year. So it's like it's a bigger number. Is my
Wow.
point. Um, yeah, like we've got another one here, another example to just give you another idea. So
Yeah.
November 2023, 27 years old, 600 feet, one bed in Coquitlam, right at the SkyTrain. Rented in 2 days, 13 showings for $2,300.
Wow.
We just rented it after 93 days, $1,900. We showed it 33 times.
Wow.
And that's a 17% drop from November 2023 prices.
Nope.
And that 12 to 18% from the peak is like what we're kind of seeing in general. Nothing has been like holding that peak pricing, that's for sure. Nobody's coming over the top. Definitely some low balls like 2,300. They offer 2,000, and we're still setting up a call to chat with them and see if they're here to play ball. So yeah, that's from the peak pricing. It's like 12 to 18%, depending on the age of the property is a big one. So if you got an older property, those are, people have talked about the K-shaped recovery where you got certain people going up and certain people going down in the economy. This is kind of happening in the rental market, except the K is both going down. It's just one's going down slower than the other is what we're seeing right now.
Well,
yeah. The older product is tougher.
And I think that with respect to the condo market, it has probably more forces acting upon it from a rental perspective than say other asset classes. I mean, there's a lot of purpose-built. We keep hearing about a number of purpose-built rentals that are entering the market now that have been under construction for some time and are going to further compete, and I typically reduce the prices even further. Is that maybe a two-part question here? One, maybe I'd love to hear your perspective on the rental purpose-built market, and also where are we going to continue to see these rents decline? I mean, you mentioned, I know it's not holding the peak pricing, but are we going to hold where we currently are, or do you think that there's further declines to come?
Well, earlier today I pulled so BC Housing does like a monthly housing registration. So these are properties that are registered to be constructed, and we've got over the last 20, 30 years, you've got 95% of the properties being built multifamily. They're going to be condos, and that's where all the rental has gone into. In the 2024 reports, you've got, just quoting from like BC Housing's chart, is 22,421 condos registered in calendar year 2024, and you got 17,922 rentals. So those are purpose-built rentals. Those are not condos that are probably going to be rented out. These are buildings that are entirely, there's one land title. It's an apartment building. So that's 44% of the new inventory coming.
Wow.
Those are registered in that year. So I'm assuming, I'm not an expert in the BC Housing report, but it's like, okay, you're gonna build these. So I'm assuming they're going to start popping up 2 or 3 years from now. But we also have a ton of condos and purpose-built completing now. So there's that stuff already happening, plus what's coming down the pipe. So good, we're building a lot of housing. It's just a matter of what prices those condos and rentals will get. I think as the market continues to fall, you're going to have more people, get engaged in it. A lot of people just kind of go about their day. Things are unaffordable. And then they're going to hear an anecdotal story of a friend getting a sweet deal on some place by the beach or whatever. And then they're going to start looking, and then it kind of starts going like Vancouver's Vancouver. But yeah, there's a lot of downward pressure right now. Prices have stabilized since like October from what we've seen, but with more and more purposeful rentals coming, they're going to have large marketing budgets, lots of incentives, and they need to get these properties rented so they're stabilized. Like, I did some consulting for a project in Vancouver, and they got occupancy in like September of last year, and they're still 50% vacant.
What?
Right?
Wow.
So it's like it's tough out there.
So I mean, we had the GM of Vancouver's urban planning from the city come on our podcast last week, and when we started addressing affordability, it really sounded like that, purpose-built rentals was sort of the avenue that I suppose most easily presented itself in terms of living in the city in an affordable way. But I guess my question is, are these purpose-built rentals that are either owned by the city or owned by corporations, are they going to be in many ways the answer to affordability? Because I think when you look at it long term, a rental is a great way to keep somebody in the city for a period of time, but it doesn't necessarily help them build their wealth, especially in a place like Vancouver. Is that really the solution in your mind, or do you see affordability getting addressed in a different way?
So CMHC has put out their, rental report for the last however many years, and they do it once a year. And for Vancouver, the vacancy rate has been, sub 1 for over a decade, or, in and around a decade or more. And once you get that number at 1 or less, the number is kind of pointless. Like, you can only operate a large multifamily building at such a low vacancy rate. You have to have some sort of vacancy for repairs. There is going to be marketing vacancy. Places might rent right away, but you still have to do documentation and screening, and there's just operations that happen. And so, in my opinion, like, less than 1 is effectively 0, but in reality, it's effectively, the way Vancouver's work is a negative. And so all this purposeful rental coming in is like, hey, well, we needed that already. Like, this is yesterday's problem being solved, hopefully in the next couple of years, to get a balance of the housing options. Literally, one of the only reasons my company can even exist is because we built so many condos. So I'm kind of talking against my own book here, but knowing how rentals operate in a condo versus a rental building, it's just way more expense. Like, it's cheaper to operate the exact same, apartment versus a condo. You can provide better services to the residents. It's operated generally by business people who are looking at it as a business. And so if serving your tenants is going to be more profitable for you, you take better care of the tenants. And as much as people are going to say, oh, landlords don't do anything, they don't take care of tenants and people, that's complete garbage. Because in markets like this, you're going to see the great operators survive and the awful ones go bankrupt. It's markets that we've seen for the last 10, 20 years that anybody can make money. And I bet most of the people listening to this, they've made a bunch of money, or their friends have just accidentally made a bunch of money in that market. So they're going to need to, having these rental buildings is very important. And further to your point, the more rental buildings that are around, people will move into those and open up spaces in condos to then be purchased. It's a bunch of condos that are rented, right?
One of the conversations I've been having a lot with clients of ours, for example, is a lot of what were homeowners that wanted to buy for future projects or wanted to buy an investment for, say, their kid so that they could stay in the market. These sort of condo purchases seem to be not nearly as popular as they once were. And I'm wondering now if this sort of, with all of these more properties coming on, if we're actually going to see sort of a kind of the same sort of condo crisis that we're seeing in Toronto. Number one, I mean, when you're seeing just property prices there are in the condo market are dropping a lot. So are rents. And the investors have just decided that this is no longer really an asset class that they want to participate in, at least for in the short run. And I wonder if that, are you seeing sort of that same sort of demand? Are people considering selling those investment condos now? Are they getting out of this game? Has the legislation to, no longer allow Airbnbs? I know it's a bit of an older legislation, but is that still having an impact on people's decision to either rent their properties, or are they saying, hey, you know what, I'm kind of done with this. It's time to button it up and get rid of it if I can't get the rent?
Yeah, I think being a landlord has never been a sexy, profession or hobby, if you will, except for the last 20 years. And so I think what's going to end up happening is landlords are going to get back to the people who actually want to do it. It's a very personal decision. People have asked me, like, oh, how many investment properties do you have? Because we work so often with pre-sales and realtors and landlords and everything. And my answer is always 0. It's like, well, that's kind of weird.
Yeah.
Like, don't you? Well, it's not, because I have a certain investment thesis. I don't like high leverage. And then why the hell would I put, 60, 70 or 80% down on a property? That I'd rather do something else with my money, is what people might say. And like, well, when I buy an investment property, that's what I'll be doing. And so that's my own decision, because I will want to be a landlord in that scenario. But the last, 10, 20 years has made it pretty easy for people to get in and be a landlord. It's been much easier, especially with low interest rates and that kind of stuff, and incredibly low vacancy. So it's just a matter of the people who don't actually want to be landlords are going to leave. As far as our portfolio, like, we have over 200 units under management. Wow. I'd say 80% of those are condos, and we currently have 2 properties for sale.
Wow.
So that's 1% of the entire book. A lot of our clients are individual one-off owners, and a lot of them are just trudging on through. That being said, 2025 and 26, as you know, and we're having a lot of renewals this year. So we're going to see how the next, year and a bit plays out. But I mean, we had a huge spike, like the market had a huge spike in, condos going on the market for sale in January. And we didn't really see that. It wasn't off, the normal plan. So there's a lot more complaining about it than action, as far as we see it. And then most of the new potential clients that reach out to us today are the ones who are unable to sell their property. So like, oh, hey, okay, either I don't like my realtor or the market sucks, let's just rent it. And then we give them a number and they, oh, that's ridiculous. It's like, yeah, it's the price. Like, housing is less valuable now. Mm-hmm. Get into the room and realize what's going on and make a decision, right? But they don't want to be landlords at that price. They're just looking for more money, right?
Interesting. So, I mean, we're presented, obviously in the next month here, things politically in Canada are going to change. I think it doesn't really matter what sort of side you stand on. And I'm wondering sort of maybe what your take is going to be on whether we're going to see more pro rental housing, or whether, I mean, we have seen from the Conservative Party and from the Liberal Party, both of them trying to remove GST on the purchase of, brand new condos or brand new property, $1 million or up to $1.3 million and under. Do you think this will bring back interest from the investor, or do you think it'll continue to be more end users that'll enter the marketplace?
Yeah, it's there's.
I want to put you on the spot.
The news and the political cycle is just like, no, it's just like, how far back do I need to go here? Like, it's just an absolute disaster right now. Like, there's just no way to really understand who's going to do what. Even like, it was like a week and a half ago, I just got this random call from a journalist who does, freelance articles. And they were doing something in, it's called Stories, I believe. And they wanted to interview me about, David Eby's comments at some session he was at. And I'd read the article. I'd already retweeted the article out from the person who wrote it. And everything that he was saying was complete opposite as to what he's been saying for, the 24 months prior to that. like just total opposite, like the checklist all the way down, and then, oh no, now we're going to talk about, supporting all those things. And it's just, as soon as the political winds kind of move around, then okay. What was interesting about it was actually the next day after that interview, I went to a talk, and our housing minister was there. So I got to hang around and chat with him for 5 minutes, and I literally just showed him the article, and I was like, hey, what do you got to say about this? He's like, yeah, I think it's been taken out of context, and we're just looking for ideas and things. But there wasn't really any substance to it. And his assistant that was there said, we're really in like an idea collecting phase right now. So the one thing I floated to them was is looking at like syndications to generate more capital into smaller rental projects, especially when they're really old, to improve them, to improve the inventory, or to build more, especially with the multiplex stuff that I know you and Dan have been talking about quite a bit. But it would have to be some sort of really safe, plan where the government is involved, or some sort of legislation around it, similar to the Strata Property Act, but hopefully way, 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 way simpler. Because if you own a condo, you're just a shareholder in a big apartment building.
Right.
And if there are other, if they're going to move around some of these rules about moving tenants out or something, then you're going to see capital come back. But as long as all of these incredibly restrictive things are in place, I think the capital is just going to kind of stay away. Like whatever they're saying on tariffs and all that kind of stuff, that might stay, that might not stay. We don't know. So until that happens, we have no idea. But just strictly speaking, BC, we've, for lack of a better term, tariffed ourselves for I don't know how long, at least the landlord and housing provider. But I do think rentals are going to continue to keep coming, and we're going to move more into like a purpose-built side of things. And if capital is going to come back on the market, it has to be welcomed with open arms and supported, and not vilified. And that's all they've done for the last long time, is vilified any capital.
Yeah, and people who have been housing providers. I mean, the amount of times I've helped people sell their investment property just because they just don't think it's a ethical thing anymore. And it's, like you said, for the last 20 years, you were able to make money kind of by throwing a property up for rent, and away it went. But I think we're entering a time now where we're either going to see some corrections, or we're going to see, there has to be, again, a bit of a policy shift, I think, if we're going to welcome capital back to the marketplace, that balances the relationship between tenant rights and landlord rights. Because the way it kind of stands now, the tenants, they in many ways have the majority of the rights on their side. And I'd be willing to bet that there are more properties available to rent, more basement suites that could be rented out, more property in other neighborhoods in different areas, where we could actually have these properties rented if the balance of the relationship was fair. Is that something that, in your discussions briefly with, our housing minister, that you saw coming, or something that they're open to when they said they're looking for ideas?
I hope so. Like it's, I hope they have their heads screwed on straight. I mean, back to talking about good operators before, where it's like, if you have good operators in a properly supplied market, and you even have a company like ours who's a good operator for the individual, like, strata lot owner. If the competition is a purpose-built rental, and one of the reasons that, tenants want to move in there is because they have their housing secured, the free market takes care of this, because as part of your marketing materials, you will say things like, hey, we're open to signing a multi-year lease. Bonus if you sign a multi-year lease. Like, this is just what a good operator would do in a properly supplied, balanced market. So build more, let all the crappy operators go bankrupt, the good ones will stick around, people have housing, and they can get back to work. It's just, I cannot express that enough. We've just been in such a long bull run of whatever we're in now, and we're just going to see how they react. But I mean, like, I don't even know if it's on the priority list with everything going on down south, right? It's like, how many things can you stack on? How many crises can you stack on top of each other? Like, what are we doing anymore?
Well, as they say, you never let a good crisis go to waste, right? And so I guess...
Yeah, especially when you got a dozen of them.
Yeah, I mean, it's going to be really hard to kind of know, I think, where, from an investment perspective, where things go from here, because when you have all of these rental purpose built, units coming online, mixed with, I think the operators that have been landlords for 10 years or more, they can probably survive these rental fluctuations and be okay with that, and deal with some more competition. I mean, immigration will come back. A lot of, I think, what we see right now is probably a 2 to 4 year correction that we're going through, and we'll see where it goes from here. I guess I'm wondering if, the same investment that my uncle made 40 years ago when he bought his first condo that he still owns today and rents out, is that still the same? Does that still have the same appetite for somebody who is now looking to invest here? And I just don't think it does, because all of the rules now benefit one side of the equation. And until we bring some balance to this, and it's truly a free capital or free market capital that we exist in, the balance is always going to be sort of, that feedback loop is always going to be muddled with policy or muddled with exemptions, and we won't really know sort of where things stand. But
yeah, like the easiest way to get rid of bad landlords is to build too many homes.
Yeah, it is. It really is, and that solves a whole other problem too, right? So
yeah, exactly.
All right, Keaton. So if I'm an investor and I'm worried about this particular marketplace, what would you tell me in today's marketplace? What would you recommend I start doing?
Yeah, so if you're an investor that has just like sold a property at a loss, that you had a horrible listing experience with, all that kind of stuff, I'd suggest you relax for a bit. But if you're looking around thinking, well, the Vancouver market's always been pretty great, but it's very limited with all its legislation, and it's still very expensive to buy a property, all that kind of stuff. If you are a true long-term investor looking to grab something and hold it, and you want your grandkids to sell this property, Vancouver is still an excellent market. And if you're going to look that long out, you want to be looking at cap rates. So cap rates are usually used in like commercial transactions, apartment buildings, that kind of thing. And not a lot of people talk about them in just buying a one-off, condo or property like that. And cap rates are, you're looking at the purchase price of the property and then the income that comes off of it. You're not looking at the mortgage costs and stuff, right? This is just, rent in and for the asset value, the net income coming off of that property, and getting a number. And the way rents and asset values have gone the last couple of years, those cap rates have actually ticked up since the last couple of years, when asset values were super expensive. Rents were quite inflated as well, but they didn't keep up with how asset values extrapolated higher. And so if you're looking around at actually penciling stuff, you're going to find that cap rates are better than they've historically been in Vancouver. And if you're out there shopping now with how many condos are on the market, you may be able to find a deal or two in the weeds. So you just got to get to work.
Can you give us maybe an idea? I mean, I know in terms of cap rates, when I'm helping an investor look at, say, an apartment building, in Vancouver, we've historically seen, cap rates between 2 and 3%. Like you mentioned, they were extremely on, because the cost of the property was so high, the value of the rents typically didn't support it, especially at a 2% cap rate. Is that where you're, are you seeing, or I guess, what's a good cap rate perspective that an individual investor can use when they're looking at buying a rental condo?
Yeah, comparatively in Metro Vancouver, like we've got a ton that are in between 3 and 4%. And these buyers, lots of them, they don't know what a cap rate is either, but we map that out. And our numbers are pretty conservative. So we're adding in all of our fees, and we're adding in, vacancy of like 5-6%, not 2 or 0. So those caps could actually get, 4.5. And you can find those in the market today if you're actually looking around and finding something. It's entirely personal option, of course, because like, what is the value of money to you? How much is your portfolio in real estate versus stocks versus your own business, all that kind of stuff. So a 4 cap might sound amazing to somebody who really wants to get into real estate, or it might sound like garbage for somebody who spent the last 5 or 6 years investing in tech stocks and now they want to go buy some real estate, right? So they are different. one thing that's nice about, property, if you hold it a long time, that, cap rate to you, to just try to make it simple, is like you bought the property for $500,000 20 years ago. Now it's pumping out $10,000 a month in rent. Well, that looks awesome to you. Rents go up, right? And they always kind of have, but you're locking in that investment cost at that time. If you're borrowing a bunch of money to do it, yeah, it's not going to look very great. But if you got a bunch of cash to go and do that as well, there are some deals to be found. If you like Vancouver as a market, if you believe in it, and if you understand you're going to hold it for a very long time, I'd be shopping today.
I like that because, it doesn't really speak to the speculation of people buying and selling and flipping something in 2 or 3 years. It really speaks to buying and holding in a city that you believe in. And, if you truly believe in that and you're going to go the long term, you're likely going to be a very good operator too, knowing that you're really after the preservation of your wealth as well, which is, I think, why a lot of people will do this. I think if you're getting into something like a tech stock, you're trying to make wealth. You're taking a significant risk to try and grow something. Whereas I think, what you're talking about is actually taking what has grown and putting it into a safe investment, something that will continue to rise at maybe the rate of inflation or better. And ultimately, you're going to hold and capture that money, that value into the future, which it sounds like at a 4 cap rate is probably, that's actually quite decent in Vancouver. If you can find that, you should give me a call. I'll help you get it.
Yeah.
No, but that's awesome, Keaton. Anything else on the investment side that you would have people look at? I mean, I know we talked about condos. Would you have them look at townhomes or even things like in the multiplex field where we're seeing sort of a sub asset class kind of take off?
Yeah, well, actually, when we chatted a couple of weeks ago now about the multiplex options, if you can get a 4 or 6 and use the sale of one to pay for most of your construction and use the sale of another to kind of cash out and put in some RSPs or something, and then you keep one, or one of your kids lives in it and you rent out the other 1 or 2, like there's a lot of flexibility to that option. And with you and Dan and all the rules that have changed, people can really walk through that scenario and really plan out some pretty interesting things that you can't normally do with real estate. Like if you're going to sell your family home, usually you really have the option to okay, well, let's give the brother half. And it's like, okay, well, who's going to live in it? What's he going to do with his money? Like how do you get the wealth out of it? And being able to multiplex many different size lots and stuff in the entire metro area at this point, there's going to be some interesting options to kind of fraction out and sell pieces of your property without losing the entire thing, but actually cash out of some of that while adding to the housing stock. So very, very important work if anybody's considering that. And I know they should definitely give you guys a call for that because very complicated, but you guys are all over it. So
yeah, I appreciate that. No, and we see the same thing. We're seeing a lot of people who are downsizing, who, they typically would sell their home and they would, like you said, they would take a chunk of it and they would distribute it amongst their family, and the other half gets invested in the marketplace, but they lose being in a neighborhood that they've lived in for 40 years. And the option for their children to come and move back into that neighborhood disappears with that sale as well. And what comes in its place is often very difficult to afford. So, there are new options now under this bill, both, if you intend to divide the property, sell portions and rent the other portions. This is where I think there's a new investment space that should really be explored, and new cap rates might be justified here that we otherwise, would compare better than, say, necessarily a condo investment or something to that effect. So Awesome. Cool, Keaton. Well, thanks again. Well, listen, Keaton, you've provided us with a great sort of look here as to what's going on in the rental market. Would love to know if somebody is looking to rent a property or looking to get into a rental, what's the best way for them to get in contact with you? How can they find you?
So if you're looking to buy investment property or rent out your property, you can just Google literally my name, Keaton Bessie. At our website will pop up, Greater Vancouver Tenant and Property Management. So it's gvampm.com. I'm on Twitter at kbessie. But if you Google, it's pretty easy to find us. You can also text the word homeowner, all one word, to 604-256-6930, and that'll give you an automatic bounce back with everything that you would need to look at that. If you're tenants, we're on Zumper, we're on PadMapper, we're on Facebook Marketplace, trying to pump up my own clients' properties, but it's cheap. Get out there and look.
And by all accounts, it sounds like it'll probably get even maybe cheaper. So maybe a good time to be talking to you anyways, at least some sort of fluctuation from here until everything else kind of settles down, which God knows when that's going to happen. Anyhow, Keaton, appreciate you coming on the show, and looking forward to our next 6-month update. It'll be a very interesting one, I'm sure. Once we have a new prime minister and all of this sort of stuff, my goodness, we'll see where all the housing goes from there. Anyways, thanks again, Keaton. For everyone else, we'll see you next week.